All right, thank you everyone for joining. It's a good day. Today is on the 12th of August, 2026. Let me see, I think there's an echo somewhere. Just a moment. Okay. Okay. Thank you everyone again for joining. My name is Kelvin Mutambu. I'll be your guest for today. I'm hosted by BlockCoop. That's the BlockCoop SACCO. We say BlockCoop SACCO is a blockchain SACCO. Today we have a very good topic that we'll be speaking today. So we usually have this kind of webinars every month at the BlockCoop. So always be on the lookout for that. So in here we are joined by some key people from BlockCoop. I see Isaac is here. I'm not quite sure whether Isaac is in a position to say hi to everyone. Also, we also have our CEO, that's Gideon, but he's currently on another X meeting. And also at the same time, we'll be joined by some few individuals from Nomachain that are doing the tokenization of real-world assets. Just please bear with us. I see there are a lot of people trying to get in, but they're not able to do it. I'm just going to request one of the customer service to be able to let them in. Just a moment. In the meantime, just be enjoying some of these clips here. Thank you so much. We'll be starting in about 5 minutes. Thank you. Okay, so we can go ahead and start. Thank you so much again for joining. My name is Kelvin Mutambu. I will be your instructor for today. Today we'll be talking about crypto. When you hear about crypto, so many people usually think of crypto as probably some people who don't know about much about crypto. They usually think it's just some magic money somewhere. Others, they are here for the technology. And we'll be determining whether crypto is a scam or probably it's a bubble, another bubble, or probably it's the biggest wealth transfer. So today we'll be speaking about DAO. DAO means decentralized autonomous organization. It's just like voting, whereby the voting happens on chain or the voting happens by use of crypto in a layman's language. We'll also be talking about real-world assets. I hope Nation will be joining me in a few. Real-world assets, we talk about the tokenization of real-world assets on that. So on that case. So then we'll be talking about SACCOs, which are also called cooperatives, and also the also called credit unions when it comes to the United States. And also we'll be talking about the stablecoins as well. So I'm an IT specialist, the chief technology officer of BlockCoop, and also Chain as well, whereby BlockCoop is the first blockchain SACCO in Africa. So currently, they have their own token called Blocks with a market cap of 13 million. And then Chain deals with the tokenization of real-world assets. So the biggest question, is crypto a scam or a bubble? So for instance, for today, I will be doing much of the graphics. I'll be using the social media. I'm not gonna be using the presentations. I'll be using the content which is out there and the latest content. So this was posted by this guy from X called the Max Crypto. And then he just asked the question. So we waited 4 years for this. Like you can see, there's a video, right? So this is FTX. This is all these are tokens, right? And you can see for the past 4 years, these tokens have been down. So anybody who bought these tokens, and let's have a look at some of these tokens here. Because as I said, today we'll be doing some practical lessons. We'll not be doing much of the theory. We'll be doing much of the presentations of the practical bit of it. So the guy was asking, so he bought, for instance, one of the example there is Polkadot. So this is one of the token that he bought 5 years ago. And if you see the graph of the Polkadot, I think the graph of Polkadot, okay, let me go ahead and reject all this. So you'll be able to see here, an all-time high, this Polkadot was about $54. That's in 2021. You can see where from the mouse is. So Polkadot was worth $54 in 2021. That's in November. So assume this guy bought this Polkadot at $54, right? For 6 or 5 years ago. Right now, one Polkadot is worth about 0.78 of a dollar. So according to this guy, is crypto a scam or just another bubble? So according to this guy would think crypto is a scam. Why? Because this guy bought this token when it was almost at an all-time high. We call it ATH. So if you come and ask this guy, you would think this guy will say, man, crypto, you'll never get into crypto. So take another example of another guy who bought this Polkadot, still in 2020, that's November. Basically, this guy bought just 1 year before the other guy who bought at $50. So this guy bought at $4 in 2020. And then around 2021 in March, just before 1 year, so this Polkadot had gone from $4 all the way to $36, right? So this guy, if you ask this guy, the same guy, is crypto a scam? He will say, no, crypto is not a scam. It's the biggest wealth transfer in our history. Why? Because this wealth was transferred to him from the $4 all the way to to $42. That's more than 10x. So you will say he made over 10x. So it all depends. The same time, and let's assume the guy sold at an all-time high at $25, and then he bought again just the same year at about $13, and then he sold again. So this guy will always say crypto is not a scam. So in this case, we'll be looking at two markets. So we usually have two markets in crypto. We usually have the bear market and the bull run market. So in the most of the bull run market, this is when all the tokens usually are at an all-time high. So another example that we'll be looking at is ICP, right? I know most people are familiar with ICP. That's the Internet Protocol. So when the Internet Protocol was was launched, that was about 2021, in May 2021. So it was about $700. Right now, it's about $2. So if there's a guy who bought this internet protocol when it was launching here, you ask him, is crypto a scam? He bought it at $700, or probably another guy bought it at probably maybe $500. Right now, the same token is at $2. If you ask him the same question, is crypto a scam? He will say what? He will say crypto is a scam, according to him. Why? Because he bought it at an all-time high during the bull market. Right now, in the bear market, and everything is down. When you talk about the bear market, it just means that most of the token drop 70 to 80%, others drop over 99%. Example is this one. And the bull market, it means some tokens usually have huge gains. So a good example of some of the tokens that have good gains is the Shiba Inu. And the reason why I'm saying this is it's going to form the basis of our topic today. Shiba Inu, there are some people who made a lot of money with Shiba Inu. You can see it went up over 7.9 million %, right? So there's the guy who bought in November 2020, and he sold during an all-time high. That's in October 2027. That's about less than a year. And they made a lot of money. They made millions and millions of money. When you ask that guy, is crypto a scam? That guy will say, no, crypto is not a scam. It's the biggest wealth transfer in our generation. And the guy who bought at an all-time high, he will say, crypto is the biggest scam. So there is this guy here who was, let's see, was doing some analysis of Shiba Inu, right? So let's see this guy here. So we're gonna go ahead and bring this topic here. So this is from Wilberforce. As I said, today I will just be using whatever information is out there on the social media. That's the information I'll be using to teach about this cryptocurrencies and to know whether it's a scam or not. So this guy was doing just an analysis of the people who bought Shiba Inu in August 2020. If you invested in August 2020, if you invested $1,000, by August 31st, your $1,000 will be like almost 50% less. And then by September, it will be actually very low, like about $1. And then by December 2020, your $1,000 will be worth about $1.96. That was there. And then just after the December, after now the Santa Claus, January 31st, your $1 is now jumped all the way to $19,000, right? So this is what we call the patience pays. And all these are meme coins, and they are very, and then you can see the same $1,000 around maybe June, it was about $16 million. The same guy. And then around in September 30th, 2021, that was about 13 million. And then about October 8th, 2021, the same Shiba Inu was worth about $55 million for the same guy. So if you ask the same guy, is crypto a scam? The guy will say, no, crypto is not a scam. Crypto is the biggest transfer of wealth. Why? Because he just invested $1,000 and he was able to withdraw within less than 2 years. He was able to withdraw $55 million on that. So he will say crypto is not a scam. So now going back to the basic, what is cryptocurrency? So cryptocurrencies are just digital currencies which use blockchain technology. When we talk about blockchain technology, it's a technology that is immutable, that is decentralized. That means anybody can be able to participate, and everything is written on chain. That's some of the attributes of the blockchain technology. So during this period, the September 2020, this is a period that we usually say this is a bear market period, like a bear market period, whereby everything is about 99% down, 60% down, 80% down. This is now the bear market period. So at this period here, that's in September 2020 here, if anyone invested $1 here, right? Or maybe in December 2020, by September, within 1 year, the same person would have over $13 million. So that's the biggest transfer of wealth. I think so. That's the biggest transfer of wealth. So the same guy, having a look at that. Okay, thank you so much. Okay. Oh, all right. Sorry about. Yes, that's the biggest transfer of wealth. That's the Shiba Inu. So these are some of the meme coins which usually do very well. So how do you know we're in a bear market and how do you know we're in a bull market? So you'll be able to see some signs. Let's say when you're in a bear market, you'll be able to see some signs. You'll be able to see people enjoying each other. This is like this is one of the exchange. This is just an AI. They are just saying you buy high, you sell low. So they are just enjoying those people who bought at an all-time high here, and then they are selling at an all-time low. So all these guys will be saying, man, I will never get into crypto because crypto is a scam. So those are the kind of things that you usually know that you're in a bear market. You usually see some of the signs. The biggest signs that people usually put out there, there is another sign of the McDonald's that people usually like to use, like such sign, whereby it says, hey, crypto bros, we are hiring. So when you see such kind of segments, uh, on the social medias, just know you're in a bear market. Just know it's just some guys who made money in crypto, or maybe the guys who never got into cryptocurrencies. They're just enjoying the crypto guys who lost a lot of money. So because it's a game. So remember, for you to gain this money, let's say for this guy who made all this money here. So for that guy to be able to make all this money, to be able to make all this money from $1 to $55 million, that means somebody lost that money. Somebody somewhere lost the money for that. And the person who lost the money, these are the people they usually like get enjoyed on this. So you usually get so many segments out there. So you'll be able to see even the big decentralized exchange, even the Trust wallet, you'll be able to see them posting such kind of comments out there. Hey, I did not lose money. I just gained experience and it's a better entrance. So if anyone lost money here, they will be saying crypto is a scam and it's a no-go zone for most of the people, right? So it all depends. It all depends with the angle. It all depends with the angle that you got into crypto with. So if you came in to make quick money, probably you'll be very disappointed. You're gonna get hurt. Like you're gonna get destroyed by that. So we're gonna have a look at something very critical. That's the stablecoin. So and the good way, so the best way to teach about stablecoin is by using examples. And we're going to use an example of one of the token that we call, the token is called, I think, the balance coin. So there are different types of stablecoins. So there is a stablecoin like USDT, which is pegged to a dollar. So that means what? For every $1, for every one token, there is dollar somewhere. So some of those examples of the stablecoin is the USDT, the Tether. So if you look at this, it's usually stable at $1. So Tether, USDC, those are stablecoin that uses the reserve. So that means they have money somewhere stored in a traditional bank. And for every token that is issued, there is money that has backed up this token. And that's why this token is always pegged to a dollar. So this is the most easiest one. I'm not going to dwell into that a lot. What I'm gonna dwell into, the algorithmic stablecoin, whereby this stablecoin use algorithms. So one, there's that side whereby they use the reserve, the USDT, and then there's this side of algorithmic stablecoin whereby they use the algorithms for that. So how does it work? So in this is just so they are very crucial because one, they usually trust the technology. So the people who make the stablecoin using algorithm, they say, you know what, you should trust the technology. You don't have to trust the bank. You don't have to keep the money you reserve in a bank. So you can trust the technology. And this technology means what? So they usually make a technology whereby it usually balances into one. So a good example of algorithmic stablecoin that uses algorithm is the Luna Classic, the Luna C. Probably most of you are familiar with the Luna Classic. This one here. So this Luna Classic went down over 99%. So in 2020, one Luna was about $119, and then it depegged, and one Luna right now is about 0.0004. So if you are this guy who bought this Luna 4 years ago, probably at $100, right now one Luna is less than 0.00004. You'll be crying and saying it's a scam. So, a good example of what happened in here, just so that you can be able to understand how these stablecoin work is. So they usually use a technology. So Luna Classic had this token called Luna, and they had a stablecoin called UST or USTC, right? So, and this stablecoin, remember they're using the technology. So it's not backed up by any fiat. When I talk about fiat, I'm just talking about the normal money. So it's not backed up by any normal money. So what happened is they had a stablecoin, and that stablecoin, they would just using the mathematical models, they would just make sure the stablecoin is at $1. And just in case the stablecoin depegged from $1, what would happen is they would give people a chance. Let's say you bought, you have so that stablecoin is, it's supposed to be $1. And let's say it depegs to maybe $0.5. So they would encourage people, don't panic about that. Like what will happen is you can just bring your stablecoin. Let's say you had 10 stablecoins, which are now worth $10. But then right now, when they are down probably to 0.5, your 10 stablecoin, they are now worth probably $5 rather than $10. So they will say, do not panic, but then you can bring the stablecoin, those stablecoin, 10 stablecoins, and we're gonna give you an equivalent of the original amount, let's say the $10 of the Luna Classic. So they would come, mint Luna Classic, you'd come, give that USTC, it get banned, and then when it get banned, so you'll be given the Luna Classic, which are worth $10. So basically, you're not gonna lose anything because one, you had a stable coin which was worth $10 USTC, and you're given that USTC went down to 0.5 per USTC, so your $10 went to $5, and you are like, you know what? I'm not gonna hold that $5 anymore. So let me just give my 5 USTC, which is worth $5. I go ban it, and then I'll be able to get the Luna Classic, which are worth $10, and I can be able to sell my Luna Classic and get back my $10. I'm not gonna wait for that risk. So those models works pretty fine. Why? Because they usually balance. They balance because and so let's assume sometimes the stablecoin goes above $1 in the vice versa. Maybe that stablecoin is now worth $2, and remember stablecoin should be about $1, right? So let's say it's about $2. That means that stablecoin is overvalued. What would happen is people would go and they would create more USTC. They create more USTC, and then they would ban more Luna Classic. So this kind of algorithm, they work until they don't work, right? So for the case of the Luna Classic, $40 billion went out of the thin air. Why? Because people were able to exploit that mechanism. They were able to exploit that mechanism. Like the USDC depegged, and when the USDC depegged, that means the Luna Classic people would go and exchange the USDC with the Luna Classic, and that means Luna Classic they would increase the supply of the Luna Classic into the market. As you can see, the maximum supply of Luna Classic is unlimited. So that means there's no limited amount of Luna Classic that can be out there. So you can be able to minting, you can be able to produce unlimited number of Luna Classic on that. So this kind of technology works until they don't work. So people flooded with Luna Classic, and that's how Luna Classic went down. The same scenario happened here. So this just happened just less than a month ago. So a stable coin called Balance Coin, which crashed about 99% after an exploit was discovered in a DAO. So when you talk about a DAO, this DAO means decentralized autonomous organization. So this is another stablecoin that uses the algorithm. And I mean, some of these guys were very smart and they were able to exploit that algorithm. They went and corrupted the DAO. They gave themselves even more. They gave themselves more privilege, and they were able to break that down into that. So going deeper into DAO, the DAO exploit, there are several DAO exploits that has happened in the future. So, and how does the DAO happen? So, for instance, an attacker manipulates a price of Oracle. Let's say for this, the price of Oracle, let's say the price was $1. An attacker would come, manipulate that price of Oracle from $1 to 0.5. And how the DAO works, so the DAO, so if an attacker manipulates the price, for this, a good example is, let me see if I have an example of a DAO that was manipulated. Let me see. Yes. Okay, I think I have it. So let me try to explain in a layman's language how this DAO was manipulated. So think about this. So there was a vote, and that vote usually leads money to people. So you come with your maybe 500 Ethereum, 100 Ethereum, probably they are worth about $200,000. You come with your 100 Ethereum, and you don't want to sell your 100 Ethereum. You deposit in a vault, and then you take a loan of probably maybe $300,000. What happens? So most of these lending protocols, they usually use oracles to determine the price. And once the price is manipulated, you can be able to get liquidated very, very easily on that. Sorry about that. I see somebody is trying to call me here. Oh, yes. So an attacker just manipulated the oracle. So what does the oracle do? The oracle just gives the price. So an attacker made an oracle look like the price of that token dropped from $1 to 0.5. And if you took maybe a collateralized loan, and you took probably, let's say that token is Luna token, it's worth $1. And then the oracle says, you know what, the token has been, has gone down from $1 to 0.5. So that means the value of the token that you took, they went down. So all the collateral that you had, they all get liquidated. So those are some of the manipulations that happened on-chain previously, whereby the DAO was manipulated and the guy was able to get away with a lot of money on that. So a good example, another case study, whereby you find some losers and winners is the ICP case, as we talked about. So the ICP, as you say, the ICP if you believe, so ICP was one of the biggest cryptocurrencies or one of the biggest projects back in the days. So everybody said ICP would come to replace the Amazon, the Google Cloud, because ICP, they do believe that they can create like the cloud infrastructure, the one that you use, let's say like the AWS, the Amazon cloud infrastructure. So ICP believe that they can build this cloud infrastructure on chain. And everybody used to say ICP would come to replace Google, they'll come to replace AWS. So for those people who bought at the top here, they do believe in the technology. Right now, probably they'll be saying it's a scam. But then for those people who believe in the technology, those people who believe that in the future, all these cloud will be decentralized, they always do something called the dollar cost averaging. So that means they always buy. So long story short, crypto is not a scam, and crypto is the biggest transfer of wealth. But just remember, you just have to know the right time to buy. So most people usually have they usually have a three-way of buying this. So they usually put 80% to the very stable cryptocurrencies. For instance, they put the 80% to Bitcoin and Ethereum. Those are the one of the major ones. And then also they put about 30% to the altcoins. You find them putting them on maybe crypto.com. You find them putting it on maybe Tron. You find they put them on Cardano. And then the 10%, they would put it on the high risk. And if you look at the historical data of this, cryptocurrencies have been outperforming the stocks in a very, 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 very big way. So this is the historical data from CoinMarketCap. And this historical data goes all the way from 2013. That's the first time that they did this. So if you come here and let's see in April 28th, so you can see on April 28th, 2013, Bitcoin was at a market cap of 1.4 trillion, right? And then the price was about 131. The second, which was the second in place, was Litecoin. So this is another cryptocurrency, was about $4. Right now, at the current state, if you look at that, so you'll be able to see that Bitcoin today is about $63,000, all the way from that $134,000. So that means anybody who bought this is about maybe 13 years ago. Anybody who bought Bitcoin at this price, they would say this is the biggest transfer of wealth that has ever happened in their lifetime. So not even a piece of land, not even a property can be able to give you this kind of returns. So these people who bought Litecoin at that point, right now Litecoin is about probably maybe $40 something. It's right now it's at 23. It's at $45, rank number 23. So and you'll be able. So one thing that you'll be able to observe from here. So all this now from number 3 to number 7, all these tokens are not in existence anymore. They are not there. So anybody who bought all these tokens, they are nowhere to be found. Probably they went to zero. So these people will be saying crypto is the biggest scam that you ever find. Why? Because all this is gone. It's nowhere to be found. So they usually say each and every day there's about uh, right now every day there's about 50,000 tokens which are released each and every day across multiple blockchain or maybe multiple blockchain protocols. So there are different kind of blockchain protocols that are there. So there is Ethereum, and that's the EVM compatible. And then there is the Solana, there is the Bitcoin, that's a blockchain on its own. So let's look at probably when the Ethereum came in. Let's see. Let's see if these people bought, let's say 2016, December 2016. December 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. 2016. So in December 2016, you'll be able to see Ethereum was at $7 at that point. So Ethereum was number two. XRP was at 0.006. Bitcoin was about 886, just less than 1,000 USD. That's about 10 years ago. So, and you'll be able to see like so many tokens here survived, right? And you can see the Dogecoin was here. This made people a lot of money. So these are the data so some of the data that you'll be able to see that the biggest transfer of wealth happened on this. So, and cryptos have so many use cases. One of the use cases of cryptocurrencies is lending. So you can use your Bitcoin and then you can deposit your Bitcoin to some of the lending protocol. Let's say like BlockCoop lending protocol. You can deposit it on more for lending protocol. There's so many lending protocol, and you can get money from that. That means it's an asset. It's just the way like you can just take your house, your title deed, and you can get money from that. You can get money from that. So I see Nahashon is here. In Nahashon, if you're here, just wave, and then I'll be able to give you a chance on that. So another thing that would make people think crypto is a scam is because of the bridging hacks that happen, the attack that happened, the bridging. So a good example of a bridge hack that happens is a Polkadot bridge. So bridging means what? Assuming you have an Ethereum. Ethereum runs on Ethereum blockchain. And this is an asset. And you have Ethereum worth $1,000. And you'd like to use your Ethereum as collateral in maybe in a Binance environment, in a different blockchain. So bridging just helps you to be able to use your Ethereum or to be able to use your token in a different blockchain and be able to use it in another blockchain. It's like, for instance, think about you can use your title deed of a house in Africa to get a loan in probably in Europe or maybe in another continent, right? So, but then for you to be able to do that, you have to go through several loopholes. So bridging just means that. Bridging just means you can be able to get in and off from one blockchain to another. You can be able to get in and off from one blockchain to another, and also you can be able you can be able to gain the benefits of the both sides. So that's one of the biggest places that attacks happen on the bridging. And one of the biggest attack that happened was a good example is the Polkadot, whereby a bridge was hacked. So people are able to manipulate that bridge, and they were able to mint a lot of polka dots, that's the dots, and they were able to sell that dot to the market. So for that case, so many people will say crypto is a scam. But remember, all these are vulnerabilities because there's nowhere and there is no any other day that Bitcoin or maybe that the blockchain was ever hacked. Blockchain has never been hacked, and so far, blockchain has never been hacked at all. So another way that people usually manipulate this is through the flash loans. So that's why you hear people say, I got scammed. Why? Because people got liquidated. So there's something you call, there's like this, it's a good example of is the Asta debts. So that's one of the biggest, this is one of the biggest platforms that most people usually go do trade the derivatives, whereby you can just be able to do like 300x of your money. So let's say if you have $1, you can buy crypto worth maybe $300 with your $1. So you do something you call the leverage trading. So most people get liquidated from here, especially for the newbies. They get liquidated, they cannot be able, so they get liquidated and all their assets are gone and their wallets are wiped to zero. So for such a scenario, you'd hear these people say crypto is a scam. Why? Because they lost. But it's not a scam just because they lost is just because they don't know how the technology works. So how cryptocurrency works is like because remember, for you to make money, somebody lost money. So the same time that guy lost money, some more people made a lot of money. Like for instance, uh, the biggest the biggest competitor of Hyperliquid of Astadets is called Hyperliquid. So Astadets concentrates more on the BSC, and then Hyperliquid is more on the Ethereum chain. So in here, you can be able to see, you can be able to buy 50 ETH, you can be able to buy 100 ETH of your tokens. You can be able to buy more tokens than the money that you hold. And the upside is huge, and the downside is also big. So it's just the way you know how you'll be able to maneuver all this. So because we don't want you to keep saying crypto is a scam. So another way that people lose a lot of money is through something we call the seed phrase. So we usually have a saying that we usually say in cryptocurrency, not your keys, not your crypto. That's the secret seed phrases. So these are the seed phrases that you are given when you open the decentralized wallet. These seed phrases, if you don't keep them safe, anybody can be able to access your crypto. And if somebody accesses your crypto, they don't require your password, they don't require your email address, they don't require any permission from you as long as they have these keys. If you happen to lose the crypto, or maybe that person happened to lose the crypto, the owner happened to lose the crypto, you hear them say, you know what, crypto is a scam. I got scammed. I never even got an email address from anybody, right? So another good example is the multi-sig, the multi-signatory. Like this is whereby for any transaction to happen, for instance, let's say you're in a group of people, and in that group of maybe three of you, and you don't trust each other. That's probably because you're in a different continent, or probably maybe in a different regions, or probably maybe you have different beliefs, you don't trust each other, or just for security purposes, you decide to have one wallet and you decide to be depositing your money there in that wallet. So you can open a multi-sig wallet whereby you can have all of you to be able to sign before any transaction happens. It's just like a joint bank account. It's just like a joint bank account whereby no money can be withdrawn without the signatory of the others. So this is another place that most people usually get scammed, whereby so usually fight because for this the biggest multi-sig wallet that people usually use is called Safe Global. The Safe Global, and the Safe Global looks like this. This is how the Safe Global looks like. And you can be able to access this Safe Global just from your Trust wallet. If you just do the browse, if you go to Discover, then browse Safe Global, you'll be able to access the Safe Global from there. This Safe Global is a multi-signatory. So it can be able to enable, so it allows you guys to have more than one person to sign for a transaction. Let's say you want to send the money out. So all of you guys have to sign that transaction. So most of the time, let's say you are three of you and person A initiate the transaction to send money to maybe person Y. So person B has to sign that transaction that person A initiated so that transaction can go through. And then person C has also to sign and execute the transaction. So what happens? So most of the time, how people get scammed in this is the scammers usually make a UI which looks almost similar to this. Actually similar to the UI that you want to use. Let's say you want to use the Safe Global. They make sure they make a UI that looks similar to this. And the moment they make the UI that looks similar to this, you just go ahead and just click launch app, or you just go ahead and connect. The moment you connect your wallet, so you have given them authority to transfer all the money, or you've given authority to do whatever they want to do in your wallet, right? And at that point, if it's a scammer, they will be able to drain your wallet. And by that, it means what? It means you're gonna lose all your money. And when you lose your money, everybody will be crying, crypto is a scam. So that's one of the biggest ways that people lose money in that. Also, another way that people lose money is there's a link that people usually set, and the moment you click on that link, so it can just bypass everything else, and the money will just be lost on that case. So that's also another way. So let's see. And crypto is not just the only way that you lose money. So so many fiat have lost. They have lost the value, especially because of the inflation, right? Because of the inflation. The inflation is huge. A good example is Argentinian peso. Argentinian peso. I saw somebody post something somewhere because of the inflation. This is what happens because of the inflation. Because if inflation is there, every time that you save your money, this is what happens because of inflation. You save your money, and the inflation, because of inflation, your money will never be enough. That's why most people usually say, you know what, the best place to save your money is through cryptocurrencies, or the best place to save your money is through the digital assets. So So this is a good way that for those people who usually like to join, we usually say, welcome to the trading where you pay every single mistake with the dollars, not apologies. And then, so don't, like for instance, if you got scammed, or maybe if you went into a meme coin, you bought at an all-time high, and now when that token was $1,000, and now that token is worth $10, right? So your mistake is worth dollars. So in cryptocurrencies, the crypto bros usually say they don't take apologies. They just teach you the lesson, and you see them saying something like this. You see them saying, "You're not addicted to crypto. You are just monitoring the situation." And this is how the people usually give themselves an encouragement that they are still in the game. So that's one of the ways that you can hear people say crypto is a scam because they lost money on that. So the other thing that we can speak about is tokenization. And I hope Nahashon is here, but I see Nahashon is not here. So he was to speak about tokenization, but I can go ahead and speak about tokenization. So what is tokenization? When you hear people talk about tokenization a lot. So tokenization is just a conversion of digital assets of a physical asset into a digital asset. So think about this. So think about you have a piece of property. Maybe that property is worth 10 million, and you want to give your neighbor at least 10% of that property. So with the current structure that we have, so it's not possible for you to be able to give your neighbor the 10% of that property. Like you can give him a split of that property so he can be enjoying, and you can. So it's not possible. But then with the tokenization, you can be able to split that property worth $10 million into small digital assets worth $10 million, and you can be able to subdivide those digital assets into percentages and give those percentages to your neighbors, and your neighbor will be able to enjoy those assets. So tokenization is now the biggest boom, or the biggest topic right now. Tokenization and AI is the biggest topic right now that is happening. And in the Kenyan law, they just introduced the virtual asset bill. So they just passed the rules. And now they will soon be giving the licenses for tokenization and other digital assets as well. So it's a big topic. And Norma Chain is leading the way in this. So BlockCoop SACCO, that's the blockchain SACCO. It's one of the good use case. Is one of the good use case of the tokenization. So what BlockCoop did? So BlockCoop just tokenized their SACCO shares. It's a SACCO. It's just a normal SACCO. just a normal SACCO, just a normal credit union. Think about a credit union or maybe just a bank. So, and then they decide, you know what, rather than issuing just the old old school shares, we're just gonna tokenize our shares and then issue these shares on chain, whereby users can be able to trade their shares 24/7 without any help from anybody or without even any middleman. So BlockCoop is one of the good example of the tokenized shares, and they do this with the help of Norma Chain. So Norma Chain does the tokenization of real-world assets. Yes, they just need the help of Norma Chain to do that. So tokenization is big and it's happening each and every day. And the good use case of this blocks is Lipa blocks. So you find that BlockCoop, so they have a product called Lipa blocks. And this Lipa blocks is they just enable users to use those tokenized shares. They use those tokenized shares to be able to do their day-in activities. They can be able to buy, they can be able to save, they can be able to borrow loans against those digital assets. They can be able even to transfer to anybody without having to go to the office to do that. So that's another use case of that. In this case here, sorry, I'm getting so many calls here. Okay. Okay. So yes, so don't be like those guys whereby they say this is how the crypto guys usually enjoy people. So usually fight. So there's something you call the DCA, the dollar cost average, whereby people buy. So you usually encourage to buy your tokens when they are low. Let's say if you bought a token at $10 and then the token went down to $5. You encourage not to say it's a scam. You encourage, if you believe in that project, if you believe in that technology, you encourage to buy more. So you buy when it's at $5 called the dollar cost average. So this is the kind of picture that you see online there. People trying to say, you know what, my bank account has not enough money for me to be able to invest in in cryptocurrencies. So, and the way you usually know there's a big thing. So look at, have a look at BlackRock. BlackRock is one of the biggest companies out there, and they're into blockchain technology. So if you see like such big companies getting into big technology, like in blockchain technology, you can see BlackRock files for the tokenized treasury funds. So they wanna do the tokenization of the treasury funds. So you can tokenize. Remember, you can tokenize anything that is live. You can tokenize the treasury funds. You can tokenize the money market funds. You can tokenize the real estate. You can tokenize minerals. That's the rare earth minerals. You can tokenize anything that has a real value on its own. So you can see the big companies are getting into tokenization, and that tells you what? That tells you the technology is solid, and because of these regulations which are coming up, that means even the government can be able to see that there's something going on there. And it shows you what? It shows you that the technology is there to stay. You just have to be a little bit keen, and you just have to do more research. And in conclusion is crypto is not a scam. Crypto is not a scam. Even though there are so many scams out there, crypto is not a scam. So look at, for instance, there's this guy who made a lot of money, some kids who made some money, and also another, let's see if I can be able to see this. So this is another guy here who made a single mistake. So this is a YouTuber who was streaming. Let's see. This is a YouTuber who lost about 2.5 million within a second. So this YouTuber was live streaming, and then accidentally, when he was doing a live streaming, his wallet. Like he showed his wallet the secret phrase. So within a matter of seconds, because all these streaming monitored also by bots, the money was able to be withdrawn within a matter of seconds. So, and this guy lost 2.5 million within those seconds. So according to this guy, he would say what? He cannot say crypto is a scam. This is a human error that he did, right? This is a human error that he did. So he just showed his wallet address, and somebody used that wallet address. The wallet keys, and withdraw the money. Still, when he was still doing the rive, so the rive out there. So these are real use case scenarios, and this happened in April this year. So these are real life scenarios out there happening, and depending on the person that you talk to, they're gonna tell you whether it's a scam or it's not a scam, depending on the story that they give or to you on that. I see Richard is here. He's one of the guys on tokenization. If Richard, you are here, you can say hi and just say something about tokenization. I know Nahash was supposed to say something about tokenization. Okay. So another thing, so on the stablecoin, somebody also requested I speak about this. So on stablecoin, there are something we call the privacy coins. So think about a privacy coin is, so remember all these transactions happen on chain. So that means any transaction that is sent on chain, anybody or everybody can be able to see. But then not all the time that these big guys, let's say you want to buy, or maybe like these big institutions, they want to move some money, but they don't want everybody to be able to see that, you know what, maybe bank A gave 10 billion to bank B. Like what happens? So they can use the privacy coin. So think about the privacy coin um, as a good example. I can give a good example with a blender, the fruit making machine. So if you can put a banana, let's say you put one banana, you put one mango, you put one orange, and probably you put one avocado, and then you mix in a blender the two, you cannot be able to tell the difference. Like everything, like the banana, the mango, they're all gonna be mixed together, right? So the same thing happens. So think about if you can be able to mix the banana and the mango, and then later on you can be able to separate all that you mixed in a blender. You can be able to separate and say, you know what, I'm gonna remove the banana now from the smoothie. Gonna remove the banana, and then I'm gonna remove the mango. I'm gonna remove maybe the strawberry from that. So that's the same thing that happens on a privacy. And remember, if you look at that smoothie, for sure you can be assured that that smoothie has a banana, has a mango, and has probably an avocado because you saw the smoothie being made. So you can be sure, but you cannot be able to separate. You cannot be able to pinpoint, say this is a banana, this is a mango, or this is an orange. So that's the same thing that happens to the privacy coins, whereby the sender, like when this transaction is being sent, this transaction is being split into small digital pieces, into small pieces. It's called hashing, right? It's being split into small pieces. And then when it reaches to the other point, the other side, think about this technology. The blender can be able to now to separate the banana from the mango. When it's the other point, they can be able to separate all these hash, and they can be able now to be able to read the whole thing. So some of the privacy coins, so out there, this is the pink brains they did. So there's the Zcash, that's one of the biggest one. The Monero is there, the Near Protocol, the Dash, and there are so many, the Mina, so many privacy coins out there. So this, this is just an example of one of the privacy coin that happens out there. And the moment you make it in crypto, so don't let people tell you that you are lucky. So because it's not about luck, it's just about failing. Like you just have to fail so many times. You don't have to give up. You just have to fail so many times. And when you fail a lot of times, you become more experienced in that. and you never regret, and you never say crypto is a scam. So you don't become like this guy. So you arrive before crypto used to be normal. This is one of the ways that we usually say. And then you arrive after crypto. This is what happens when you're in crypto. So you're always on the run. So you're always checking, are you liquidated? How is the crypto market doing? And then this is the kind of enjoyment that people usually do during the bear market. This is right after crypto. So I see our time is now up. I was expecting to have some guys from BlockCoop or Normachain, but I see they're not here. Thank you so much for this time. Uh, Today's topic was just a freestyle topic, just doing the normal, just talking about whether crypto is a scam, it's not a scam. And we've been able to see it's a very difficult, it's a very gray area because it depends with the person that you asked. So for these people who lost money, you'll be able to hear them say it's a scam. For people who gained a lot of money, they will be able to say that's the biggest transfer of wealth in their history. So, unless anyone has a question, I do believe our time is up, but feel free to ask any question if anyone has a question. Thank you so much. If anyone has a question, there's a time. As you do that, I will just be giving you this. So these are the kind of memes that you usually see. So in cryptocurrencies, we usually make, like, if you want to make money, they usually say money, you're making money. It's fun making money. They also say losing money is fun. That's why you see like McDonald's enjoying people saying you're not hiring the crypto bros. So is the reaction like how is your crypto going on right now in a bear market? So this is how you see people enjoying others on chain. They are online. So and there we go. It's a kind of enjoyment that you see people saying, yes, they make fun like losing money on this. And the moment Bitcoin hits $1 million, that's where now you see now everybody is happy now. When now we're in a bull market, you'll be able to see the signs. The signs will be there when you're in a bull market. The signs will be there. You'll be able to tell you're in a bull market for sure because the signs will always be there for that. Mm. Otherwise, if there is no question, we can go ahead and
Kelvin, a question here. Here's Morgan. Thank you for the walkthrough.
yes, Morgan.
Yeah, would I be right to reimagine crypto as sort of a left pocket, right pocket a game? And also, would it be right if I think of it like a gamble? Because then, based on the initial walkthrough, leave alone the tokenization, I saw winning and losing. They both happen in extreme equal measures, and uh, just to rationalize that, you've also mentioned that as much as you really mastered the game or you've been this crypto game for the longest time, there's no assurance that um, you'll be able to, in some way, predict success or maybe um, not necessarily success, but as much as you've been in this game for the longest time, at no point in time can someone, let me say, who's been there for like a decade say, I'm close to success. So success is not anywhere close until you bump into it. So I think those are just my fears, and I'm giving this an approach. I'm just giving this an investor approach.
Yes, Morgan. Thank you so much for that. Yes. So there is no. So as you mentioned, there's nobody that will tell you they are pro. Like there's nobody that's going to tell you is a pro. And if anyone tells you they are pro in that particular field, that they can assure you that you're going to have a return, just know you are being scammed. So if anybody guarantees you a return in this era, just know you're getting scammed somewhere, somehow. So yes, you mentioned very good points that it doesn't matter if you've been here for a decade. But then the question is it a gamble or not? So uh, you can say it's both a gamble and also not a gamble in this way. For instance, look at some cryptocurrencies like SCP. So is it a gamble for you to think that in the future all the cloud services will be on blockchain? Or is it analysis that maybe is it a good prediction or the time series analysis that you are making in the future ICP will be one of the biggest cryptocurrencies, probably going to be able to return to an all-time high of 700, right? So not unless you are part of the team that are really engaged and knows like the next milestone, is very difficult for you to be able to determine very well that you are not really gambling when you are buying this some of these tokens. But most of these tokens, as you said, they have the real case utility. Look at Ethereum is one of the biggest token that is used in the EVMs. So yeah, so it all depends with the kind of token and how you look at it. Yes, that's a good point, Morgan. Yes,
Thank you, Kelvin. I think your response clarifies.
thank you so much. Anyone else with a question? All right, so I think we just came to the end of this lesson. Thank you guys for joining. Again, my name is Kelvin Mutambu. It's always a pleasure uh, being here. At least for now, we can say for sure. We don't know whether we're in a bubble. As Morgan said, we cannot predict. We cannot say that this is the right time to buy, this is the wrong time to buy. It all depends uh, with the capability of you doing the analysis on chain and doing the research out there on social medias. And we have seen that the biggest transfer of wealth. Some people invested $1, they came up with $1 million. That's the biggest transfer. So that person, they can never say that person can never say it's a scam. And then you saw some people invested a token worth $700. Now it's $200. So that guy will always say they never wanna be there. They don't wanna invest again in that cryptocurrency. So it all depends with how you look at it, but the future belongs to those people who are brave, and the future doesn't wait. So you have to be very flexible with this because it's coming. And when you see the government regulating it, the US government doing the Genius Act, the Stablecoin Acts, and all those, the Kenyan government, the Nigerian government, the South African government, talk about El Salvador. Bitcoin is a legal tender there. So this shows you what? This shows you that the technology is here to stay, and now the government are looking at how they can be able to benefit from that, to benefit from taxes. So the technology was used before by the criminals, and that's why everybody used to think. Like right now, everybody still thinks it's that era, but we're in a very different era, and the new generation, the Gen Alphas, the Gen Zs, the Millennials, this is a currency that they will be using for the future. Thank you so much, guys, for joining. Again, my name is Kelvin Mutambu. We'll be able to see you guys next month. I will be having a new guest next month. Today, we are supposed to have two different guests. We are supposed to do this, three of us, but I think they are more engaged somewhere else. Otherwise, have a good night and a good day to some of you, and may God bless you all. Thank you so much.